which will most likely be by hedge funds. Of the 56 contests that we have seen so far, 50 were related to the election of an alternate slate of directors. Of those 50, the breakdown is as follows. The management win was 21, dissident 10, a management and dissident split 3, settled 12, withdrawn 2, and pending 2. Now, of course, in shareholder activism and proxy fights, the majority of the deals do happen with directors and alternative slates, although executive compensation continues to be one of the primary targets of activism. Of course, recent market volatility adds greater concerns over pay for performance and executive compensation. Of the 339 governance-type proposals voted on this year, and we track at Georgeson that from January to June 2008, 39% dealt with executive compensation, whether say on pay, pay for performance, and of course, approving future golden parachutes. In addition, dismantling of anti-takeover provisions received the strongest shareholder support, including the repealing of classified boards. That's 15% of those 339 governance shareholder proposals voted on that I discussed earlier. Shareholder right to call a special meeting at 7%. Reducing supermajority provisions, 3%, and poison pills, 1%. So you can see shareholder activism is not slowing down, and of course, we at Georgeson expect a significant ramp up in the months ahead.
I think when activism started to grow up a couple of years ago, I think, and when the economy and the credit markets were strong, from our perspective, hedge funds often challenged boards for a couple of things: to sell off underperforming business assets, to put the company up for sale, and to return the cash and the capital that was stockpiled on a company's balance sheet, or to lever up and take that capital, return it back to stockholders. The governance, although it became certainly one of the leading arguments in these campaigns, to me, it was secondary to the capital return argument, because at the end of the day, the activists were looking for a return on their investment. And often their time horizons, and you guys can certainly talk about this a lot better, but their time horizons from our perspective were certainly shorter, 3 to 6 months. They want to get in and then get out with a quick return. Over the last couple of years, I think hedge fund activism has certainly evolved and matured. And what we've seen is, especially over the last 6 months or so, is that with the credit markets tightening, those calls for selling the company or levering up and returning capital to stockholders, those arguments don't seem to be viable, just because there isn't the money out there and people and companies are sort of hoarding their cash and waiting to ride out the storm. So as a result, a lot of hedge funds are starting to now modify their arguments, if you will, and starting to put forth more governance approaches and even more strategic and operational improvement plans at companies, similar to the Nelson Peltz at Trian and sell more ketchup at Heinz. And we're starting to see that, and even what TCI did over at CSX, which is they put together a 200-page white paper on how to better run a railroad. And here's our plan to run it better than the current board and management team. So I think that's definitely been a strategy. And to your point about ISS and slates, again, earlier on, at least from my observation, that the hedge funds were often looking for control of boards or directors, or at least a majority of the number of seats on a board. And to do that, the activists needed to persuade the institutional holders and ISS, or risk metrics, or whatever they're called today, you needed to persuade them that they had a better plan to operate the company, or that there is a way that they can create value for the other institutions in paying a premium for their shares. What happened was ISS saw that, and the way they voted on these things, and Rachel, I'll look for your opinion, but ISS over the last few years has typically sided with a hedge fund who's looking for a minority slate on the whole argument of why not and what's the harm. So the burden of proof has now shifted to the companies, saying you need to demonstrate why it's harmful, why a hedge fund looking for 1 seat or 2 seats on your board would be harmful and disruptive, as opposed to not. And so I thought the hedge funds saw an opportunity there, and then they started changing their strategy from control slates to just under minority, or just under majority rather. So they go for 3 or 4 seats, knowing that ISS or Glass-Lewis would support them, for 1 or 2 seats. And again, I think these are, in ISS, I believe the statistics are something like 70% over the last 2 years that ISS has endorsed a short slate of a dissident in a proxy fight. So these are sort of countervailing forces that we're seeing here.
Can I just